Okay, well, hey everybody, Dan Fitzpatrick here at stockmarketmentor.com on November 24th. And I want to look at Broadcom today. This is how the chart looks now at the end of the day. But I want to take you through I guess you could call it a day trade because it sure as hell went on all day and still really going. And that's using one of the tactics in the 59-minute trader course that I have. It's a process that I developed 15 years ago, actually more like 20, and have just kind of been refining it ever since. But this one here is really a pretty simple one, just based on the volume weighted average price, otherwise known as the VWAP. That is this orange line here. And what this is the average. It's a moving average basically, but it's not just based on price, it's based on price and volume, hence volume weighted average price. And what it does is it looks at any given time during the day, what's the number of shares traded, the total number of shares traded, and what's the average price. And so what that does is it gives you a heck of a lot better information than just a key moving average, like, oh, it's the 50-day moving average or it's the 8-day moving average. The thing about volume weighted average price is it actually gives you a sense of where the true traders are, like where is their emotional commitment. Is it in buying a stock? And if it is in buying a stock, then the stock's going to stay above the volume weighted average price as it is here. Okay, it's going to stay above this level. And then when the stock comes back down, it's not like it bounces off the VWAP. It kind of defines the VWAP. It comes down, and then as it gets to the average price that typically people have taken it that day, then buyers are coming in because they want to get more stock. And so that's really what we had happen here. This is a 5-minute chart, and you can see how the stock just kept going. Here's a 10-minute chart for all day long. Now, what I want to show you is this. If you're looking at this, you can kind of look at it as really an opening range breakout here, where this is the first 5 minutes. Stock gapped up pretty nicely, actually, over 5% from the close on Friday, which was a crappy close. And so stock had to get up above from the close. It had to get up about 2.5%. So anyway, the bottom line, though, is this. So this gaps up, and let's say you're saying like, well, gosh, I want to buy this stock, but I think I got to wait and see how it trades. So the first 5 minutes is over. Then the second 5 minutes starts, and because the stock is above this first 5 minutes, now you can start taking a position in the stock. And your risk is actually pretty well defined, because you're not taking the stock here and putting your stop all the way down here below, say, Friday's close, right around there. You're not doing that. You're using the volume weighted average price as your reference for buyers. And the idea is when the stock falls back to where the average price is, that's when additional buyers are going to come into the market. That's why the VWAP is where it is. Now, if it falls below the VWAP, that tells us that the buying's pretty much over and we want to be out of the trade. So this, yes, it gives us a direction, but it also gives us a signal. It gives us a signal to tell us whether the reason for us being in the trade is still valid or not. And the reason for us being in this trade is the stock is moving higher because buyers keep coming for the stock in volume, in size. That's why the stock continues to trade above the orange line here. And so how do we know when the buyers go away? Well, the stock will start falling back below the orange line. So we've got our stop somewhere around here, 354, something like that. And then the stock just continues to go, even on this one bar where, oh, that's the end of the rainbow. Nope, not so much. The stock still just stays right around the VWAP. Now, this is an hour into the trading day. That's typically when your 59-minute trading tactics are going to be over as far as new positions. But on an existing position like this, if you've been looking to buy this stock anyway, look, you just continue to hold this right along the volume weighted average price. And again, if it falls down, then you're out of the trade. You got a nice little trade. It didn't amount to much, but it was better than taking a loss. And so you stick around here, and what happens with the stock? As the day goes on, it gets further and further away from the volume weighted average price. Now, why isn't it? This is a little advanced here. Why isn't it pulling the volume weighted average price up with it? Seems like it should, but no. And the reason is because volume is really low. And so even though the price is advancing, it doesn't have that much influence or impact on the volume weighted average price in the way that it does this 8-day 8-period exponential moving average. See, this is based, I hope I'm not getting too granular for you. This 8-day, I keep saying 8-day. The 8-period exponential moving average is based only on one number. Every time that a 5-minute bar ends, whatever the price is, that's the print for the 8-period exponential moving average. So that's why as the price climbs, the 8 EMA climbs with it. Meanwhile, the VWAP doesn't. And the reason is because you see it's not really trading on any volume here versus back here when it's trading on a boatload of volume. So bottom line is you just stay long this stock. It's a flat VWAP. And then finally, you get a run into the close. And so this is just kind of walking you through how you would stay with this trade all day. This is what the stock looks like now. Let's get it to here. Probably going to see some resistance tomorrow right around 390, but I like the way this is shaping up. Now, by the way, I'm talking about 59-minute trader tactics. I'm going to show you something. Look at that guy's handsome as the devil. You can get the 59-minute trader course at 50% discount. It's another handsome guy right there. You can get all about this here. You can read all about it here, everything that I'm doing with some great testimonials from people who have taken this course. This is probably, unless you've had some truly monster trades this year, this will be the best trade that you've ever made because you can use this stuff every single day, whether you're day trading or just trying to get in and out of profitable positions. So you're going to get a 50% discount. That's the most that we've ever done for this product. So I don't like, be perfectly candid, I don't like hawking my own stuff, but I'm the only guy to do it. And I will tell you this, I promise you, if you use the information that I'm giving you here, you absolutely will make money. I can guarantee that for you, okay? All right, I'll see you guys next time. Have an awesome day.